Hey, what's up, everybody? So Monday, episode 63, I'm going to get right into the market, then some open positions, show a few slides, but spend the majority of the time answering questions. I'm also going to share my transparency on how I can potentially blow up my account, which is pretty important that you guys watch this and hopefully learn from it, because you guys will find yourself in similar positions, okay? So let's talk about pre-market first. The Dow was down like 350. Tech was off like 100 points. I went on, I tweeted out a video saying there's like a 5% chance. It's not really likely. The market will crash. And crash for me means I thought the Dow would be off 900 points and tech would follow by like 300 points, okay? And if that happens, I said the UVXY will likely spike 20 to 30%, okay? Now keep in mind, I think the UVXY is going down. So when I mentioned it could spike 20 or 30% pre-market, if the market collapses, again, I said there was like a 5% chance that would happen. And let me explain why I thought we had favorable conditions for the market, okay, and why we do going forward. So people are afraid. First, understand the psychology of trading. The market threw up today. It rebounded a little, okay? People are afraid it's going to throw up on itself again. You have to understand this. Who wants to be first to dip their foot in the water to buy whatever stock, okay? You have to understand that people are going to be hesitant, except for institutions and hedge funds, because they know what they're looking for. They're looking for the best entry. They already know what they're thinking about the stock. So they already have it. But let's get right into the market. So the 10-year dipped today to 1.18, which makes it very attractive to invest into our tech, right? Gross domestic product, GDP, okay? It's increasing, they say, but just not as fast as some people had hoped, because people are thinking, oh, recovery, okay, we're back to full strength. We're not back to full strength. We are working our way back. Now, here's one interesting fact about the Delta variant, okay? Regular COVID, okay, when it affects, if I have it and I touch a couple people, the most I'm going to give it to is 2 to 3 people, they say, on average. This Delta variant spreads so quickly that one person will infect 8 to 9 people on average. So that's what the worry is. That's what the concern is. Now, here's the good thing, and we're back to the positive, okay? Air travel numbers from yesterday, the largest amount they've been at this entire year, meaning people traveling again for personal travel. I don't know about business, but for personal travel. Let's talk about lumber, okay? Commodities peaked in January or February. Guess what? Lumber, as an example, is now less expensive than it was pre-pandemic. So pre-pandemic, before any of this happened, lumber was at a certain price. Now we're here, okay? So it looks like deflation. So again, all these things should be positive for the market. They should be positive for home builders. They should be positive for Dow stocks, yet Dow stocks are getting beat up, okay? I'm not sure what I'm doing with Carnival or Delta. I do think we saw bottom, but I know a lot of people will disagree with me. Now, if I told any directors on Wall Street these bits of information about the market, air travel's up, GDP is increasing, the 10-year is dropping, and I asked them what they thought about the market, they would say, yeah, we'd be at all-time highs. Now, they're not quite wrong, because we're only off 4% from all-time highs. And let's talk about 2 weeks ago, 10 out of 12 days, we closed at an all-time high, all right? So it's not like we're in a bear market. Don't think the market's going to throw up on itself day after day, or you're going to see the same thing you saw today, tomorrow. I know a lot of people are saying that, and specifically about the UVXY, but let me go back to tell you why I don't think that, okay? I looked at charts, okay? So I went back to October, which is the last time tech had 5 straight losing days, okay? And I looked at the chart, and then I said, you know what? We had a similar position in March where 10 out of 12 days were red, and like 7 to 8 of them were really bloody. And what did we need? My platform I was talking about. We needed 2 green days to flip our positions completely, and we went from minus 60% to plus like 40 or 50%. 2 green days. 1 green day, we finally saw some money. The second green day, we finally saw some profit. So again, when I ask you to trust the process, I can't time the market. I have no crystal ball. I zoom out, okay? We did the same thing in May. Little different circumstances, but I suggest you guys zoom out. There were some stocks that were heavily beat up and other stocks that were doing well. So let's talk about some stocks going forward that could do well with the 10-year on the decline and tech being a little stronger than the Dow right now, okay? So we'll talk about Roblox is one of them. Roku is another one I like. DocuSign is another one I like. But let's go into my positions, okay? Because a lot of you have the same positions. So pre-market, I mentioned I was buying some Roblox options. It was $2.64 a contract. That's what it closed at. I said I'm going to buy it for $1.75. I'm going to anticipate the dip. Now, what happened? I put in a bid. I got the order. I paid $1.75. And then what happened like half an hour or an hour into the market? Some of you bought the same options for $130 for 130. I paid $1.75. You paid $1.30. It was $2.64 the day before. What happened? I got 60%. Some of you, and I think I have a slide, returned over 100%. So we get in and out. We secure profit. I mentioned how difficult this market is. Okay, now let me get into, also I jumped into AA. It was down 5.5%. I said to myself, I liked it pre-market. It was down 4% pre-market. I saw it down 5.5%, right? And I said, it's a materials play. I'm going to go in. I'll buy some options. It spiked to under 2% down, still down. But it went up about 3.5% since I bought it, and I made 28%, and I locked it in. That's what we do. We lock it in. I hopped into another position, CCI, not CCL, CCI. I think I'm down currently maybe 18%. Of course, I bought it in the morning where it's a little higher. And then finally, as transparent as I can be, and I wanted all my members to watch this video, and I will tweet it out so you guys can watch, okay? Because I'm going to tell you how I became too heavily levered in the UVXY, okay? I thought it was going down as it always does. I missed the signs on Friday, all right? So I carried those over to today. I mentioned pre-market. Some of you could sell on open if you want to, but I was going to be holding, all right? Then I got fooled with the recovery at noon that we started to see the markets pick up. Tech was only off like 100 points, maybe 90 points at the time. I expected the UVXY to drop to $32, and it didn't. So I got fooled. But that's not the point. I bought more as it spiked to $37, and I just saw, because I was typing out what I was going to say to you guys, before the market closed, and it closed at $35.60, let's say, or something to that extent. I saw it spiked over $38 to $38 and maybe 60 or 70 cents, okay? Thank goodness I was working on the live stream and not watching, because I probably would have had a heart attack. Why? Now, this is most important. Because I overly leveraged myself, okay? So this year, all in all with my options account, I worked out the math. I put in about $3,000 going into today, okay? My options account as of 2 weeks ago, and these are various two options accounts I use. As of 2 weeks ago, before I got into some bad plays, I'm going to explain those bad plays, was up to 74,000, from 3,000 to 74,000. So we're in about what? 6 months of the year, okay? So that's not too bad. Now, what happened today is I ended up adding another 25,000 of UVXY, and I'm going to explain. Because my current UVXY position, all right, well, let's talk about my positions real quick. I lost 20,000 in NTLA puts. Remember, it spiked all the way up to 200. I bought my puts too soon. So I bought my puts at $135, $130. When it spiked, people were buying 170, 180, 160. Everybody else made money but me on that. I cut my losses. I lost $20,000 on that, okay? The second position, STX. Let's remember, I was up a ton of money. I kept adding to my position. When it dropped, boom, I lost about $20,000 on that, okay? So no doubt. Now UVXY, I went into UVXY with $35,000, okay? As of this morning, when the market opened and the UVXY was spiking, my $35,000 was now worth about $11,000. So I was down about $24,000. And what I said is, I need to average down. I tell these guys to average down. This is my options money. I'm already averaged down. I need to pull $25,000 from another account. And what am I going to do? I'm going to buy some puts. And when did I enter into that? When I think it was what? 34.50. Right, 34.50. I bought 25,000, and you guys are like, "Wait, 34.50? No, it's 36.50, Matt." Yes, I went in too soon. So this is how I'm telling you how I could blow up my account. Did I wait for the best spike today to average down? No. I did buy some more when it hit $37 because that was the spike that I thought I was waiting for. I didn't know it went to 38, and I didn't know it went to 38.66. So I averaged down too soon. So when I tell you guys, throwing good money after bad, because I think I'm going to be right. Let's say I'm wrong. If I'm wrong, let's say that the UVXY, knock on wood, finishes the week Friday at $38. All of my puts will be worthless. All right. So I will lose like $60,000 in the UVXY. So I'm telling you, you could blow up your small account. It was originally 3. I put in 25 more. I would basically be losing 28,000. So all the hard work I put in this year, I could basically lose it in 4 more days. So that is why I'm sharing with you. I don't want anybody ever to get so heavily levered into a position where it's, I don't want to say life or death, but it's life or death. If I blow up this account, I will put another $3,000 in, and I will work it back up to 70,000. There's no doubt about that. I've just been off 2 weeks. I can admit it. Some other gurus have supposedly been off 4 weeks. I don't want to compare myself to anybody else. I let that NTLA put option tilt me. And then someone was talking shit, I let it tilt me. So I apologize. Everybody that's stuck with me, I apologize. Things are going to get better. Now, I don't control the market. I don't have a crystal ball, so I couldn't tell you it was going to spike the UVXY to 38 and change today, or $39, wherever it was. I couldn't tell you that it would drop 10% in the last 10 or 15 minutes of the day. What I could tell you is that institutions were buying. They were buying since about 3:20 p.m. They were buying both Dow stocks and tech stocks, okay? Let's keep in mind the 10-year is still low. We have earnings coming out this week. 330 companies are reporting. Airlines as well. Airlines scare me because they're not really reporting earnings. They're reporting what their outlook is going to be for the third and fourth quarter, which is going to be very important. It's not so much earnings because we know the airlines lost money, okay? Now, let's see what I do, okay? Besides for not controlling the markets, I read charts, I track volume, I make educated guesses. So someone's going to say, dude, you said UVXY was going down to 32 today. No, my timing's a little off. I'm probably 1 day off on that one. And worst case, I'm 2 days off. And am I saying it's only going to $31? No. I'm saying it's going to $31 like Wednesday. Let's say Thursday and Friday are mixed in the market. One good day, one bad day. It'll probably go under $30 to like 27 and change, maybe $28. Yes, that's substantially. So that's what I'm looking for. But I make educated guesses. So right there was a prediction. All right. What am I predicting? I'm predicting the markets aren't going to drop 900 points tomorrow. I'm predicting the market, the futures will probably be up 100, 150 points, and that will probably double. So I'm expecting 200 to 300 points up tomorrow as a quick bounce for both tech and the Dow. If I am wrong, we will know in the morning, okay? We have two options. Futures will be green, futures will be flat, or futures will be down. If futures are down, the UVXY will be spiking another 4 to 6% pre-market. In fact, people might get extra excited pre-market and jump on it. It might spike 9 or 10%. So although I went like that, that's worst case scenario, what I'm expecting. Then I'm expecting the market to open and there to be buying because I believe there are enough stocks on discount right now and enough sentiment in the market. I mean, the market was selling off today because of COVID, because people don't believe the interest rates and they think it's I mean, it just doesn't make sense to me. All right. So the point is, if the market sells off tomorrow, I would have to see if it's a slow progressive sell off, then that would tell me run for the hills. OK, if they can do little steps going down and every time it bumps up, it goes down lower. That's a bad sign. OK, however, I saw the buying at end of market today. It was strong. I'm anticipating there'll be strength tomorrow and a bit of a rebound. And with that said, I expect the UVXY to go down, somewhere between 10 and 12%. But I'm still not selling. Why? Because we get involved with the UVXY to see it go down to make money. So when it spikes and you're having these heart palpitations, right? And you're getting worried about your account and you're like, okay, worst case scenario, I'm going to blow up my account. I'm going to lose this or this or this, and I'll start over with this money or whatever. So the fact is you're thinking worst case scenario. Now, best case scenario is it dips hard. We have a strong bounce and the UVXY dips hard. You make a lot of money. Now, what will probably happen is I think the markets will recover. The UVXY will dip and you guys are going to sell. You're going to sell and be like, all right, I'm out. And if you sell and you're out and it spikes again and you buy back in, it's okay. But if you sell and you're just like, I had enough of that, I'm exactly flat. And by the end of the week, when it goes to like 26.42 or something to that extent, you put in all the worry, all the stress. We had a stressful Friday. You had a stressful over the weekend. This morning it spiked. It went down. You thought we were good. It spiked again. We went down. You thought we were good. It spiked right before the end of the day. You almost had a fit at 3:30 p.m. I wasn't watching the markets. If I was, I might have had a heart attack. Why? Because I could potentially blow up my account. So where other gurus talk about invest in this stock, invest in that stock, I'm giving you guys theory. Understand that my platform is here to teach you how to enter into certain trades, to teach you how to exit, to teach you how to average down, and most importantly, to teach you to secure profit. It's not that we ride the elevator up and down. We're not up 100%, then we're down 20%, then we're up 60%. No, when we get up 40%, if you're content, you take profit. You wait for it to dip, you re-enter, and you repeat it again, okay? So when people tell me, dude, you're wrong on eBay, it didn't finish at $71.40 last week. I say, okay, I made profit on eBay 3 times last week. It spiked, I sold, it went down, I bought. 2 of them were in the same day because if you look at the eBay chart, it's pretty volatile. It likes to dip early, then it recovers real strong, and then it dips again. So if you miss the first time, you always have a second time. Okay, lastly, if you like what I'm saying to you and you're getting some value, whether you're on my platform or you're not, or you just found me for YouTube, if you like my transparency, please do two things. I would ask you to subscribe, hit the subscribe button, and hit the like button. If you hit the like button, and if you want, make a comment. We're about to go into questions soon. I'm going to do slides first, but please, analytics are very important to YouTube. I'm here to help the average trader. I'm here to help the 30 million to 50 million retail traders with strategy. Some of them were told, buy the ask, push it up. Some of them are like, I'm only looking for a short squeeze. Some of them are AMC or GameStop only. And ever since AMC has been getting hit from $72 to $69 on the way down, I'm telling the new people, sell it. Now, it's not that I don't support the cause. I say just buy it cheaper. If you sold it at 35 and you bought it back at 32, you increased your portfolio by 10%. The same is true for GameStop. Let's say you sold it at 240 and you bought it back at like 160, okay? You're saving $80. You're increasing your portfolio, just your GameStop stuff, by 33%. All right, so those are just some lessons. It's all about being the most efficient trader you can be. It's not about picking stocks. It's not about being right about everything. I would like to tell you the direction of the market. I would like to explain the psychology of trading to you guys so you know what to look for. And when a stock dips, you either know it's a dip or it's going to keep going. And if it's going to keep going, I'd like you to be able to realize that. That's why we talk about inflow versus outflow, demand and volume. That's what my specialty is. All right, let's get to some slides so we can share some information. Okay, not only do I use my strategies for the market, but I use it for sports betting. Before the NBA Finals started, I said, because the first two games were in Phoenix, I said I expect the Suns to win game one. If they win game one, I will take the Milwaukee Bucks plus 280, okay? That's a nice return. It's almost 3-1. Okay, I didn't think they were going to lose game two, but when they did, someone said, are you going to do the same thing? And I said, yes. Now I got them plus 380, the same bets. When I enter into a stock or an options position, and I mentioned a 25% rule. So if I had $2,000 and I invest $500 the first time and it goes down and I invest $500 the second time, the same thing was true with my NBA bet. My first bet was $1,000. Yes, my second bet was $1,000. There was no third bet. If they went down 3-0, I'm not throwing good money after bad money. Another lesson, we don't waste money, okay? If they're down 3-0, they're going to lose. Now it was 2-2. They won the fifth game, which is very important for it because now they're minus 400 to win, which means they're going to win 80% of the time right now. Win the championship. I'm going to lock up my bets. Let's get to another slide. The point is you can use a dip for other stocks. Now, I mentioned pre-market, so this is what I share with my platform. 3 stocks on my radar. Walgreens, which I think was off like 0.5% or something to that extent. I think it rebounded. X, which is a steel company, U.S. Steel, okay? So I bought the dip. I already sold, all right? But my thought process was the infrastructure bill and Macy's. And Macy's announced some type of news today. I bought it at $16, stock only, $16.09. After I bought in, it went to $15.99, so it lost 10 cents. Usual thing happens after I talk about something, it goes down about 10 minutes later, and then it spiked to like 16.33. No, I didn't sell, but if I was in options, I would have sold. If I'm in at 16.09, it spikes to 16.33, I'm out. At secure profit, I would have got like 20%. But I didn't. I don't know where Macy's is now. It's a longer term hold. My price target on Macy's, I think, is going to be like $22.50, which would return 40%. So when do I see this happening? I would say within a year. Probably within 6 to 8 months, assuming that COVID and the Delta variant doesn't stay with us. If this is the new norm and things are on lockdown forever, then yes, the Dow will adjust. Some of these stocks will adjust. Let's get to another slide, please. All right, pre-market video. I was explaining my thought process. Generally, the U.S. leads the way. So the U.S. futures leads the way. We don't usually react off Asia futures or the world market like the CAC or the DAX or something like that, which were all off 2%. However, today we did. Today the market sold off. They blamed it on COVID, but we've known about COVID spike for 2 weeks now, ever since July 5th when I started talking about it. The Dow was recovering before July 5th. When the spike happened and we've been going up and all 50 states are on the rise, that's when people started throwing up on Carnival, on Delta, on Las Vegas Sands. I mean, let's talk about Las Vegas Sands, LVS, all right? I saw a ton of call options today, meaning someone thinks it's going up. And I also saw put options at $44. So people think both. When it comes to the market, somebody says, okay, if LVS can go from 51 to 44, they're insinuating they're going to lose about 20% for them to make some good money, okay? And the other way, I saw the same thing on the other side. So maybe they were doing a straddle, but I don't think it was the same person. Let's get to another slide, please. I mentioned if you were up at 4 a.m., Zoom was buying FIVN. Now, I do the valuation of the deal. I use my own mathematics. I don't trust anybody else. I figured the shares were worth $200.88. So why isn't the stock at 288? Because I believe Zoom was down on the day. So when Zoom was off 3%, I updated the price target, and it's still, if you look at let me just check it out because I think it was a good investment. FIVN, right? Let's see where it is. Okay, search FIVN, and let's see what the chart looks like today. Oh yeah, so it took a nice dip in the morning as soon as it opened. So you could have got in at like $182. It closed at $188. So we're talking about 3% you could have made. In fact, it was up 5.9. Yeah, you could have made about 3% today. You wouldn't have got in at the best price. All right, next slide, please. We have to take every opportunity. So I use math to figure shit out and to tell you true valuations. When Zoom is off 2% or 3%, I have to recalculate. Okay, so this is it. Biden and China. We banned four Chinese nationals. They were charged in a hacking campaign. So what are we going to do? We ban them. We probably throw them out of the country. We bring charges against them, but we expel them from the country. And then China does the same thing to us, except they won't choose 4 individuals. They'll probably choose like 14 individuals. And then we will retaliate and we'll do sanctions on one of their companies or something like that. This is not the way that free trade should happen. We know China has its own problems, but this is not the way for it to happen. And Biden is doing a lot of things that I don't approve of, but I don't want this to get political. Let's go to another slide, please. I mean, it just lets people, anyway. All right, Roblox. So again, here's the great thing. So I taught a lesson about min entry, okay? So again, I entered in at $175 per contract. Those who waited or who got 20% less than me, because I also talk about when I enter in something, I want you guys paying less. So got in at $1.30. So if you save 45 cents, yeah, it's like it's like 25%. Okay, next slide, please. So there's always a min entry. Okay, so this is the person that saved the money. I told them we get in, we get out. I think this person got himself banned on his account, too many day trades. Now, what I told the person is, and what I tell all of you, this is very important, okay? Let's say you're going to get banned from your account. First of all, have more than 2 trading platforms. Use Webull, use Robinhood, use E-Trade. I don't care. Have 2. If you have 100 here, have $100 here. 500, 500. I don't care. You need 2 platforms. So he's going to get banned. What I said to him is I once had to make the decision of getting banned years ago. And I was like, you know what? I'm just going to wait out this trade. I don't want to execute a day trade. They're going to ban me from the platform. Do you know how much money I lost in that one day? I lost, my account was like at 23,000 or whatever it was. And this is years ago. My account went from 23,000 all the way down to 4,000. Now, the good news is I didn't get banned from day trading. The bad news is the next day when I executed 2 different trades, I got banned anyway. And by the time I did, I think I had like $2,800 left. So the moral of this story is if you have money and you're trying to secure profit or secure less of a loss, and it's saying, warning, 4th trade in 5 days, you're going to get banned. You know what? Save the money. You know what I'm saying? Exit out of the position, find a different platform to trade in. So you won't be able to trade for a week. Who cares? It's the difference between losing your profit and losing your sanity. All right, let's get to another slide. The point is, I told him, good call, man. Take the profit. All right. I haven't talked about how the institutions and hedge funds manipulate the market, but I'm going to give you an example right here. Analyst on Friday morning upgrades Delta to a buy and gives a price target of like $56 or $58. And I said, well, that's disappointing because my price target is $62. All right. The same analyst firm obviously knew about COVID. And what happened? Well, Delta's lost about 10% since this guy came out with his upgrade, okay? So what happened is the institutions, they fake you out. They tell you good things about a stock. You buy the stock, and then they pull the rug, and they're selling their shares into you. The market is manipulated, okay? Let's talk about American Airlines. Since its high of $21, I think it was late Thursday or maybe Friday, it's lost over 10%, okay? Same thing. So we're all anticipating the airlines. Now, I happen to think the airlines might get a pop. If the Dow shows a recovery by Wednesday and the airlines report and it's not so terrible, it can lead to some good things for the airlines where you might see 3% one day, 5% another day, 6% another day. So don't think it's over. If it does show a transition to turn, it's going to continue. That's what I'm hoping for. Other than that, it's going to be choppy, I think. I mean, that's what my bet would be. All right, let's get another slide up there, please. See, coin and dark pool orders. So 2 facts right here. First of all, there were some dark pool orders on coin yesterday, meaning coin was $225 or $226. Dark pool orders do not show up, meaning they don't affect the price. They're agreed upon by 2 parties on the side. Someone says, I have this share or I want this share. And somebody says, you have to pay this. So the person or the people on the side that were buying coin stock were paying $229 to $230 and even a little more, even when the stock was $225. So is that important that they not affect the price of the stock? Now, if they knew the market was going to sell off, I'm sure they could have waited today and bought coin because I'm sure coin went down today. All right, next slide, please. And I think we're almost done so we can get some questions and comments. Okay, this was space. When I said space was going down, I forgot what this person had. Oh, he had some stock, watched episode 14, got out of stock, and then secured with put options to prevent his stock from losing that much money. He made 200 and change on the options and lost $71 for stock. So he's net profitable. He still has his stock. So anybody that's in stock, let's say you're in AMC and you want to protect yourself against the downside. What's wrong with you buying put options? AMC goes down, you're still holding your stock. You have the put options, you're making money. You could buy more stock. Great idea. All right, next slide, and we might be done. No, okay. This is just what I saw with US Steel. It was down 5% pre-market again. So I was anticipating it to go down 5 or 6%, and that's when I would buy in. It opened at -3. When it went down 5.5, I said, okay, if the market throws up on itself, I'll be in big trouble. Now, the thing is, the market did throw up on itself, but I still was able to secure my 28% profit. All right, let's get another slide up there. And we're done. Okay, awesome. So thanks, everybody, for staying with me. If you missed the beginning of this, okay, I spoke about my positions. I spoke about what I expect in the market tomorrow, okay, as far as a bounce, okay? And I know it sounds crazy, but I'm a contrarian, and that's how I do things. We did see the UVXY drop 10% right before the close, which is a good sign. Hopefully, it's not going to spike, and it'll only spike if futures are getting severely red and beat up. Now, what happens if Asia sells off tomorrow and some other stuff like that? I'll talk about AMC in 1 second. If Asia sells in the morning, I wouldn't be too worried. Now, if Asia and the Hang Seng sell off, and then the CAC sells off, the French exchange, and then the DAX, the German exchange, and then the FTSE, the London exchange sell off, then I would be more concerned, okay? Again, I believe the U.S. leads the way. So even if all this happened and futures were still like even or green here, I would have a more positive because the markets were hit pretty hard today. Okay, let's talk about AMC. All right, my opinion on AMC is everybody that matters that has the option of you guys squeezing against the apes, squeezing against this and pushing the stock price up to 100 or 1,000 or wherever you want, and everybody's making a lot of money on AMC. I don't think this squeeze is going to happen. Okay, so you buying puts on airlines. Okay, so I don't think this squeeze is going to happen on AMC. It doesn't mean you can't make money. I do think AMC will be very volatile, especially with the reopening play. I wouldn't be surprised if AMC goes down to $28 and then spikes all the way up to like $50 or $60. But make money, okay? If it spikes, you sell, okay? But I don't think the squeeze is happening. What's my opinion on buying puts on airlines? It's great if you did it when Delta was 43 or JetBlue was $2 higher or American was $21.50 on Thursday or Friday or whatever day it is. And then you could have sold this morning when American was like at $18.50 or something to that extent, which was off like 15% in 2 days. So the airlines have already been beat up. Carnival went from 24. Let's see where that one is. Is it over 20? That's an interesting question. CCL. Carnival is 1972. Okay, so it's fighting 1972. That's not a surprise. There was buying in the morning, buying at 11, and buying at the end of the day. So the only reason Carnival ended down 5.7% was because the market was so beat up. The Dow was probably down, 800, 900 points. I don't know where it ended up. But Carnival looks like a good recovery stock. There was tons of inflow today. So everybody was buying. The volume was so high, 84 million, but they were buying. So someone was acquiring stock. So yes, I think the downturn's over. I think the Dow throwing up on itself. Now you have to understand how substantial it is. All right. So yes, I would not buy options in the airlines. In fact, I think the reverse could happen. You're expecting puts. I would say I wouldn't be surprised if stock spikes. A bunch of the airline stock, JetBlue, Alaskan, American even, Delta. All right, next question. Love, which is Southwest. How do I feel about averaging down on NNOX? I love NNOX, but I think it could drop more. So let me check out NNOX. I love NNOX. Now, why am I not knowing where NOx is right now, if I love it so much? Great question, Matt. I'll answer it. Because my NOx options are leap year options, meaning I don't have to worry about NOx till January. So this up or turbulent market or whatever, I know there are institutions that are interested in ownership of NOx. I watched the tracking of NOx since it was $20 and then it went to $30. Let's see where it is right now. I think it almost went to $35 because that's what I thought it was going to happen a couple weeks ago. All right, now we're back at 26.59. There was a ton of buying today. So huge sell-off 2 days in a row. Inflow today, 1.24 million shares, which I don't think is a lot. What do they do? Probably 1.7. Yeah, I was going to say probably 2 million. However, I think it found a baseline, okay? Now you're thinking it's got to be tech related. It's an Israeli company, so if anything happens in the Middle East with any type of wars or anything like that, I would watch out. But I happen to love NOx. So for me to be profitable, I think NOx has to be like just over $31 come January, and it's at $26. So yes, it would be like 18% gain, but I'm pretty sure NOx will probably be up 100% by then. So I really like NOx, yes. All right, let's get another question. You can average down on NOx, or if you like what I was just talking about, leap year options. You go out to January, you say in or at the money, so $25. Let's do it right now because I have it open here. All right, so let's go to options. Here's what you do. Let's go to January, 186 days. The stock's at $26, so you pick a $25 strike price. The option goes for $725 a contract, right? So let's say you had 100 shares or less, okay? But you could put in $725 into it. You can own one contract. Then if NOx goes to $40 or something to that extent, you're making 100%. If it goes to $40 and you have less than 100 shares, okay, you're making well, it really depends how much shares you have. I'm trying to figure it out, but you could have 10 shares, 20 shares. I would rather you have a leap option. All right. Oracle puts made you 70% and you got out today. Oh, that's awesome, dude. Because remember how strong Oracle's chart was yesterday. So let's look at Oracle real quick, because if I like something, it just because it has one bad day, so if you made puts, it made money. Oracle had inflow today. It had such strong inflow today, so it was consolidating. It's at $87. Oracle's, I'm going to add this to my watch list. I thought I did already. It looks great. So what happened? Oh, so Oracle sold off big time and was at its lowest around 1 p.m. when the markets are throwing up. So that's how you made 70%. All right, thoughts on Mara Riot puts with Bitcoin very low support if it breaks. Did I see the article 60% of hospitals in the UK have 2 doses of vaccine? I did not see that article. I will look into that. If that is true, that would be a terrible thing for the Dow. But again, I don't believe everything I read. Mara and Riot. I haven't looked at Bitcoin. Let me just look at the chart. I think 30,000 is the base. Yeah, I mean 30,700. It fluctuates between 30,700. It was down to 30. I get that it just threw up like $1,000 today. So you're saying if it does it again, it'll go under 30, and maybe that's a good opportunity. However, remember tech is strong. So I wouldn't play around with those. I happen to own a bunch of Coinbase options that I purchased. That are, I sold, well, whatever. Okay, I think they're going to be good. Let's just simplify it like that. Let's get to another question. All right, I'm sorry if I'm late, but I did say, I said I don't know. It really depends on the market, so it depends on the futures. But since you're here, let me look at the futures with you guys. Now, remember, after hours, I don't pay that much attention to it, but as a whole, I will look at some of my stocks here, and I'll see what I think they're doing. So I got to just get back to them. I've been looking at some of these stocks. Okay. So we got after hours, we got Oracle, blah, 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 blah. UVXY is off 3%. Okay, yeah. So the SDAO is down 0.5%. The QQQQ is 0.77, so that's a good sign. And the UVXY is 3%. So what am I expecting? I mean, I'm hoping for like 14% retracement tomorrow. That would seem fair. Anything in double digits would be fair. I would like to hold my UVXY contract, which I mentioned could blow up my account. If the UVXY actually finishes above, I don't know what my lowest strike is, $34. Yes. If it finishes at 34 or higher, I will blow up my account. So I like to be transparent. Watch from the beginning if you missed it. But obviously, I think it's going down. I spoke about adding on, and I spoke about over-leveraging myself. Now, how do I lose? All right. I lose out if the market throws up on itself. Again, if it goes down 1,000 points tomorrow, or even 700, or even 500. If the market's off 500 points tomorrow and tech's off 100, 150, then the UVXY will spike another 10 or 15%. Nobody will want my contracts, okay? I won't even know how to sell them, and I would have to hope that it goes down because I wouldn't sell them for that small a fraction, okay? But yes, I think it's going down 3% after hours is a good start. but it never should have got up as high as it did. I can't believe the sell-off happened as strong as it did. Again, I put 5% on it, but I did tell you, if the market sells off, the UVXY will spike 20 to 30%. Boom, there it is right there. I mean, the high probably was 30%, right? Because it sold off 10%. Yeah, it probably was 30%. Again, I wish I just listened to myself sometimes. All right, next question or comment, please. All right, having the hardest time trying to figure out stocks or options are safe because the market was so stupid. Okay, so here's what I would suggest to you, Julie. First of all, it's okay to watch from the sidelines. It's okay to say, if I were going to do this, because I tell everybody to plan ahead. So let's talk about options because I'm more fond of options, okay? Even safer options, which means we go out to August 20th. That way you give yourself 4 weeks until your option expires. If you want safer than that, you can go out till September or something. You pick a stock. First, it has to have momentum. So I would even say to you, look at Oracle, ORCL, okay? Look at Oracle because there's inflow day after day after day. Even in today's terrible freaking market, I think Oracle was off like 30 cents or something like that. So kudos to the dude that made 70%. But I would find you a stock to play options or the stock. There has to be demand. So you want to see inflow day after day, but you could do either. Now, the great thing is if you do a stock and you lose like 40 or 50%, you're like, yeah, I bought this at 30. Let's just say it's CCIV. You bought it at 30. It's like $21 today or whatever it was at, 22. All right, you're down like 45%. You watch episode 14, Ask Matt. I teach you how to sell the stock and buy longer out options. So when the stock flips and it picks up, 10%, $3 here or whatever, all of a sudden your options are up 80%. You were getting crushed in stocks. You made it back with options. You were down 40%. Now you're up 80%. So you're net 40%. And you were having these paper cuts all these times because you've been in this shitty stock for a long time. So I would suggest you find a stock that has demand. That's most important. All right, next question, comment, please. Robinhood IPO. I would sell the shit out of that, okay? So, yeah, I would short I don't think you can short IPOs. If I found a way to short the Robinhood IPO, I wouldn't believe anything that company says. So they said they're having, they announced how many people they have. I think the valuation is somewhere like $48 billion. However, they were saying their numbers for quarter two are going to look great. However, they're going to lose $500 million. They're going to lose $500 million for quarter two. I would short the hell out of that company. Guy's a scumbag, Vlad, whatever. He just wants his money. All right, next question, comment. If somebody thinks about how to short it, please DM me. Tell me, hey, you could short it this way. Hey, Matt, how do you stay so focused and motivated after a big loss? Okay, so yeah, again, in all transparency, I got tilted when I lost on NTLA because I figured out the math, and I'm like, there's no way this stock goes up. And it not only went up, it went up like 30 or 40%. And I took a loss and I was thrown. And then I saw the Dow recovering into July 5th weekend. And I didn't realize COVID numbers were spiking. So that I let that throw me off for like a week. So yeah, I'm back on pace now. I understand what we're looking for. We're looking for, just like I told the young lady before, Julie, we're looking for demand and we're looking for volume. So you could see sort of those stocks, okay? I'm never getting involved with XL again, right? But did you guys see XL today? I think it was up 20 cents at some time. Off some decent volume, not crazy volume. Point was, today was getting rocked. XL was up. All right. Let's talk about Sorrentino Therapeutic. What is that? SRNE. Okay. I don't own any, but the volume was there. Same with OCGN, right? The volume was crazy there. Let's see what OCGN did today, because when it was up 7%, I was wondering if it was going to go up more. OCGN, I thought it was up 10% then. And I said to myself, really? Now it ended today up 12.5%, which is pretty positive because they usually sell that shit off. And it's up 1% after hours, which is substantial, but I'm surprised they're not selling off. Now, the good thing for OCGN, if you're in there, okay, it went up, it held, it's holding after hours. So if I'm right about the market and it recovers tomorrow, anything that went up today should actually hold pretty good and accelerate forward. So yeah, big loss. You just got to move on. Everything we do should be without emotion. So when people get upset with me or people say stuff or whatever, you have to trade without emotion. It's math. Meaning we enter into a position, you have to first make sure you like the position. Then you have two options. If the position goes up, you have to know what you want to sell it at. I want 20%. I want 30%. I want 100%. I want whatever it is. You know your exit strategy. So as soon as you buy it, I bought this option for $200. I'm going to ask $300. We don't care if it happens the next minute or the next day or 2 days. We just want that $300. So it's all about trading without emotion. The same thing is, if we bought an option for $3, right? $3, and it goes down to $1.50, instead of saying, oh, should I sell? Should I do this? Should I do that? We say, no, I'm going to buy 2 more contracts at $1.50. So now you're in 3 contracts, you're in for $600. Your average is $2. So when the $1.50, it doesn't spike back to 3 where you first bought it, but it goes to like 2.25. All right. So all of a sudden you're in for $2. Now you're 2.25. You're plus 11%. You could say to yourself, I'll get out at plus 11% instead of being just that one initial position where you're still down 30%. Would you rather be one position down 30% or have 3 contracts and make 11%? If you add the 11, 11, 11, that's 33%. So it's up 33 or down 30. That's why we average down. People say, oh, well, you just waste money. You throw good money after bad. No. If something's getting beat up enough, all right, my Caterpillar option, I bought 3 contracts. I bought another 3 contracts. It went down. It's not worth very much, and they expire on August 20th. So, yeah, I'm probably going to buy some more contracts. Why? If I buy double the amount, okay, I'll get my average price down from $8.30. Probably I want to get around like $2, something like that. I think they're under $1. So if I could buy what, like 10, 12 for like under $1, right? That's $1,200. Now all of a sudden it spikes one day up $5 or $6, and boom, I'm out with like 20 or 30%. Instead of losing 50, 60%, you're out with 20% on more money. That's how it works. All right, next question, comment, please. Okay, Netflix. Okay, here's another transparency. So I mentioned I blew up a separate account last year, okay? Quarter number 2, which is exactly where we are. So it was a year ago today, okay? I was going to Publix down the block. I had 58,000 and change in Netflix options. I had just worked my account up from 23 to 36. That day I went into Netflix. It was at $504. It closed. It was a huge down day. It was like 530 to 504. I bought it at 504. Netflix closed at 525. So my account from 32,000 all of a sudden was worth like 65,000 going into earnings. And I said, if there's ever a time Netflix is going to crush it, it's going to be today. It was quarter 2 of the pandemic. I'm like, everybody's ordering Netflix. It's going to crush it. And it's probably going to move like $50 after hours. And I was right. It moved $50 after hours and it went down. Instead of 575, where I would have had $250,000, I would have had like 260,000 because I'm good with numbers. I'm like, when this happens, it's worth at least $250,000. Great. I was 23,000 yesterday, $250,000 tomorrow. That's a good sign. Okay. And then what happened is Netflix went down $50. I got out with like $1,500 and I started over again. And then I worked it up for quarter 3 to 60,000. And then I put it on AMD and I lost all the money on AMD because they announced an acquisition. Okay. Netflix prediction after earnings. The good thing about Netflix is, first of all, they always disappoint in quarter 2. So if you were going to go by statistics, I would tell you do not mess with Netflix, okay? Now, here's what could happen. Netflix is talking about video games. So that could totally like wow people that they're getting in the video game market using Netflix because they already have the back operations and everything set up. So that could totally wow people, and that is your hope because every quarter 2, they disappoint. The other hope is that the market sold off today and that we rebound tomorrow. If we rebound tomorrow and the Dow and tech are just a little strong, like I mentioned, 100, 150 points, something like that, Netflix comes out with earnings. As long as they're not half bad, they're probably going to push higher. People were buying Netflix for 560. I think it was like, what, 525 today? Did it get beat up that hard? I don't even know where Netflix finished. I guess I should actually look. All right, Netflix. Okay, 532. That's good. Where was it today? Did it hit 525? It hit 522. So I did see it at some point today. 532 is a good sign. But, of course, they're going to buy into earnings. Nobody realizes this, but every quarter 2 earnings for Netflix is a struggle. So if you want to take the chance, plus the IV on the options, either way, puts or calls on Netflix is huge because the stock will run somewhere between 9 and 14%. All right? So 9% would be like $50. Oh, God, it would destroy the market. If Netflix has bad earnings and it tanks tech because Netflix makes up the FANG and they lose 10% right there and it goes back to like 475 or 480, that would not be a good thing. So please, people, watch Netflix earning after hours tomorrow. UAL, which is United Airline, after earnings tomorrow. There are like 330 companies reporting this week. I happen to think I'm bullish on it, but you guys know me. I'm more bullish than a bear. That's just the truth. Oh, I haven't said this in a while. If you guys are getting good content here and you like what I'm saying or you're learning something, or at least maybe you're making fun of me that I put myself on the line with UVXY, at least like this, comment something, watch the video, share it with a friend. Everything Carlos and I and John do, and even Boris, is everything's organic, okay? So even in tough times, I know the platform's holding up pretty strong, and I appreciate it. I don't charge much. I charge $3.49 a week. I don't want to talk about it, so let's get to more questions, please. All right. Cat calls. News says bullish put sweep. All right, well, a put sweep is not very good for next Friday. I mean, somebody is betting that the market's going to continue to throw up today. Now, here's the question, right? Today, do you know how many put sweeps are probably bought? So put sweeps mean the guy is sweeping all the contracts. So if it ends up he's saying it's going under 200, not my friend here, but the person who bought the put sweeps. Same with Carnival. When they bought the put sweeps at 23, they said it was going under. Plug. Somebody bought put sweeps at 25 on Plug, okay? So let me just use that as an example. Because just because someone buys the sweeps, they're not always correct about it. Plug's at 26 right now. It dipped as low as under 25. They bought put sweeps at 25. They were expecting the market to continue to throw up. They were saying if it throws up, Plug will go to 23. If it goes to 23, it'll go to 20. So it's not always correct. Now let's look at Caterpillar. See what it says right here. Oh, let's talk about microchip stocks. I haven't mentioned STX in a while. It was beat up. Micron was beat up. MU was beat up. And Taiwan Semiconductor beat up, right? It was 120 Taiwan Semiconductor, 119. Then it went to 106. If the Dow rebounds, a lot of people have bets both ways, okay? I was talking to one of my friends who's an analyst, and he was saying, I haven't seen semiconductors this beat up in a long time, and I expect it to recover. And I'm like, I was in STX, and I had my price target at 104. He's like, yeah, 102, 104, that's reasonable. And I'm like, the market doesn't agree. He goes, look at what's happening in the market. I go, I understand that. All right, so Caterpillar's 203. Obviously, it was under 200 today because I was seeing it at 200, and I'm like, let me see. I didn't buy them today. Shit, I really should have. Oh, I was looking at the wrong option. Shoot. No wonder I thought Caterpillar was so cheap. All right, the $200 options. Oh, okay. We have 210s, right? So the 210s are at like 475. I'll tell you how many volumes open. Let's see. Caterpillar open. That's a long time away. Blah, 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 blah. I really can't tell. Let me look at the chart. It's gonna move. It's gonna move with the Dow. Caterpillar was beat up. I will tell you there was some intense buying at the end of the day that was really strong for Caterpillar. The volume was really strong for Caterpillar, about 60% over. So again, it did drop 1.82%. So I can understand how someone says, okay, if it drops 1.82% tomorrow, it'll be $199. That makes sense. The Dow's going to throw up again tomorrow. Now, me, I'm a contrarian. I say after huge drops or dips like this, that people are buying. And when I say people, I mean institutions, banks, hedge funds, people with money on the side, people that are at their houses in the Hamptons or in Maine or wherever they are in New Hampshire, and they're putting in money into the market tomorrow. Why? Because that makes sense. It's the most logical thing. All right, let's get to another question, please. So you can't believe all the puts and calls. Now, I mentioned unusual whales the other day. The gentleman offers a service where he puts out data. So he said a whale, which means someone spending 25 or 50 or 100 or a couple 100,000 are buying a position. So somebody will buy calls in Apple, right? And you're like, oh, good, someone's just spent $1 million. They're buying calls in Apple. And then you go on, and 10 minutes later, they'll be like, oh, someone just bought puts in Apple at $135, which is what I saw today. Someone bought puts in Apple at $135. So again, there were people that think tech's going to throw up. Now, the great thing about tech is I saw the SQQQ, which is the inverse of tech, okay? So the SQQQ goes up while tech goes down. So I saw the SQQQ at $9.09, spike all the way to like $9.30, and I'm like, okay, market's going to throw up, tech is going to sell off, but let me check out where that is. Because I actually looked at it and I said to myself, you know what, there's a good chance the SQQQ goes under $9 tomorrow. It's at $9.10. It was up 22 cents today, but there was a huge sell off at the end of the day. So if I'm correct and we started the downturn, first off, if we started the downturn, all these three charts will look alike. SDOW, SQQQ, and the UVXY. So if you see the UVXY down tomorrow 9%, there's a good chance the SQQQ is down 3% and the SDOW is down 3, 4, 5%. Now, if you're in options, you multiply the percent times 10. So if you see something and you're like, oh, I almost bought that SQQQ, it's off 4% since I thought it was going to buy it. You multiply it by 10, you would have made 40%. The same is true for the UVXY. Say it goes down by 12%, and you're like, I entered into puts, and you're in the money, and it goes down by 12%. You're probably going to make well over 100%. All right, yes, thank you, love. Hit the like button. Bum, bum, bum. Please hit the like button. Subscribe. If you want, share the video. So Mitchell's been great. He's been smashing it. Now, Mitchell told me real quick, he's been bearish for 2 weeks. So ever since July 5th came out and I started talking about some stocks could be beat up because the Delta variant, but I still believe the Dow is going to recover. I just didn't know how substantial it was. Everybody takes their own positions, all right? So he told me today he's been bearish for 2 weeks, and he's been killing it. So that's awesome, dude. All right, Alejandro, you got it, Mr. Matt. Learning a lot from you. It takes courage and confidence to be transparent. Okay, yeah. So, yeah, that's great. I appreciate that, man. Again, I don't want to look foolish, but, you know, it is what it is. Transparency is the win. I appreciate that. Listen, here's what it is. If I blow up my account, say the UVXY finishes at $36 on Friday and it never goes down lower and I never mention selling or something like that, I don't want you guys to think I'm going to have unlimited money, because I won't do that. I will not go into my stock money. I already did that today. I put $25,000 out and I felt terrible. And the fact that I'm down like 12% on that, so I'm down like $3,000 on extra money that I put into the market today. If I didn't touch it, I would have $3,000 more dollars. If I didn't touch the extra money, if I said, hey, wait till the end of business, let's see where it ends up today, right? It would have spiked and it would have went down. If I had saved it, it would have been great. Please subscribe to the channel. Hit the like button. It's quitting time. Carlos is in Dallas watching Raw tonight. WWE Raw. All right, thanks, everybody.